Hey guys, what's up, how's it going? Welcome back for another video. In today's video, I'm going to be doing a re-review of one of my top favorite covered call ETFs, HYLD. If you guys don't already know, I did a poll recently asking if you guys would like me to do an updated video on HYLD. Now, I did a review video about last year. It's a little bit outdated. There's been a lot of changes with the funds. A lot of things have happened in the markets. So I think it'd be kind of cool to do a summary. And of course, there has been the elephant in the room, which is the distribution cut, which we'll talk about in today's video as well. So I think, it's a perfect time to do the video. You guys said you wanted to do the video, so that's why I jumped on, and this is why we're doing the HYLD re-review video today. So quick little overview of what's to come in today's video. So we'll focus on the ETF itself. We'll do a quick little introductory. I'll talk about it. We'll go over the different sectors. We'll go over the different ETFs. We'll talk about kind of how the fund works a little bit. And then towards the end of the video, I'm going to share with you guys my overall returns. We'll take a peek at my portfolio. I'll talk about why I hold this fund, what kind of place it kind of holds, and what kind of objective I'm trying to do. And I'll show you guys the total returns and the actual results I've gotten. And I'll share with you guys my kind of game plan going into the future when it comes to some of these more passive income based funds. And like usual, guys, if you guys enjoyed today's video and you guys want to support the channel, be sure to like the video. And if you guys want to see more content from me, be sure to smash the subscribe button and subscribe to the channel. All right, let's jump inside the video. Let's learn and talk about HYLD. All right, guys, what's up? It's going. So the first thing we're going to talk about really quickly is going to be the fact sheet for HYLD. That's the Hamilton Enhanced US Covered Call ETF. So this income oriented ETF is really focused on delivering you more US income every single month. And we'll cover the fact sheet, this kind of homepage, really quickly. And then we're going to talk about things like the funds. I'll talk about the distributions. We'll go over the dividend cut and all those different things that kind of happen. And I'll give you guys some tips and kind of why I'm still investing into this fund as you go through this little part here. So the first thing I want to talk about really quickly is going to be the actual yield. Now in here it says it's 13.99%, but in actual reality it's a little bit less than that. If you bought the stock right now, it'd probably be around 11.8% or so. If you hold the stock, you have to kind of do the math yourself. I'm currently sitting at about 11.2% yield, so it's still in that double digit range. It's still above 10%, which is originally what they were kind of trying to do. So a lot of people need to look at that, and we're going to talk about that a little bit later. But I just wanted to point it out there, even though it says 13.99%, this is the old yield before the cut's going to take into place. So it really is more like 11.8 to 12% yield. So just kind of keep that in mind. And that's obviously going to change as the stock fluctuates over the next little while. So it's a portfolio of US equity covered call ETFs with overall sector mix broadly similar to the S&P 500. And that's kind of the goal, what they're trying to do here. And it's a good fit for investors who want attractive monthly income in USD or Canadian. There is an American version of the fund, that's HYLD.U, or the Canadian version, which is HYLD. I personally hold the Canadian version because of conversion issues and stuff like that, and it's just more easier for me to buy that, but it's up to you guys if you guys want the USD version. Obviously there's differences between the two, so keep that in mind. Diversified blue chip US equities exposure. We're going to look at some of the different ETFs and stuff like that as we go through this. And the other thing to keep in mind is this has enhanced yield and growth potential with a modest cash leverage. So 25% is it's a little bit of leverage, but it's not super high. So because of this, you can get a higher yield as well as potential growth, or if the markets go down, it kind of works like in both ways. So if the markets go up, you have potential to get a little bit of stock growth from the fund. But if the markets go down, there's potential to go a little bit more. So it'll move a little bit more with the market, I guess is the best way to put it. And we've kind of seen that over the past year or so. Actually, especially in 2022 when the fund first launched, the market just did go down quite a bit. So obviously HYLD is sitting a little bit lower, but that's kind of just the timing of the way it was launched here. And in summary here, we'll read the fund objective, which is the fund seeks to provide attractive monthly income and long-term capital appreciation from a diversified multi-sector portfolio of primarily covered call ETFs focused mostly on US. There is a little bit of mix in here, but it is mostly focused on US. Other thing to keep in mind, there is some cool little insights here where they do lots of updates on the fund and stuff like that. There's been a lot of changes that have happened with the fund, so I felt like it was kind of important to do this video for multiple reasons. Number one, the fund is not the same fund it was, I think, about a year. Was it last year when I did the video? I think it was, yeah, it must have been last year when I did the last update. And it's also important to kind of see what's going on, especially with the dividend cut. I think this video is probably going to give people a little bit more insights and kind of help them out a little bit if they're a little bit confused on what to do going further into the future. And another thing you'll notice about the Insights tab here is they talk a lot about HDIV and HYLD. These were the two the big funds that Hamilton did launch, and they kind of work, they're almost like sister funds in a sense, where we have HDIV, HDIV, which is the Canadian markets, and this is going to move with the Canadian markets. It also has a fairly high yield, I think around 9 to 10%. I think more closer to 9 at the time of doing this video, but I have to double check. And this is obviously going to move with the market. So Canadian markets have done really well in the past year or so. So this fund has definitely performed quite well. Actually, I think even quite a bit actually outperforming the S&P 500. But again, you gotta look at the markets. And then HYLD is the US version, and obviously the US stocks have not done very well over the past year, so we can see that here. But we're going to talk about things, look at the performance overall. So we can see the performance here from ticker HYLD. We can switch to the US version if you guys want and see performance, but it should be the same. We have the different NAV price, the yield, of course, like I mentioned earlier, it's not 14%. That's going to be switching to about 11.8%. Depending on when you buy, you guys will have to do your own calculation. Annualized returns. So here's a little picture about the returns, and keep in mind this is going to be total returns, so that's dividend yield plus stock appreciation. And since this fund is a dividend yield fund, you have to factor in the yield, right? So the 1 month return is 4.75%, 3 months is 6%, 6 months is 16%, year to date 6%, and then 1 year return is minus 18, but since inception is 11. So the fund has kind of recovered a little bit, and it's on the path to doing better. In fact, if we look at the all-time return of HYLD, we can see that for the most part it was pretty close to the S&P 500, but of course, the S&P 500 obviously is at a little bit of a gain, but if we factor in the dividends and things, it's not as bad as it might look if you're looking at a regular stock graph. Still, HYLD has a little bit of a ways to go, but that yield will help bring it up over the course of the next year or two. I think so, in my opinion. And as long as you dollar cost averaged into the fund, or you bought during the dips, you probably will coming out on top. And that's kind of the way a lot of these funds work, or any stock works, especially in a market that's kind of dipped, right? Like you have to buy in it, you have to kind of approach it from the long term if you want to see things work out in your favor. So this fund, if we look at all-time stock appreciation, is down quite a bit. So it may look on paper, if you're just looking at a Google chart or a stock chart, which is not the whole picture, that the fund is down negative 24%. And it is in stock appreciation. But if we look at and we take in the total return, it's actually, and add those dividends, it's only down 11%. So we have to kind of keep in mind. And I always like to remind people to look at total return because that matters the most. Here we have the performance of HYLD since February 2022. Since the markets have kind of been recovering a little bit or kind of more flat, obviously it's a very short period of time, so they're saying that it's performed more or on par with the S&P 500. But keep in mind, guys, as the markets recover, as the yield kind of starts to pay out for the fund, you should do fairly well. But again, like, let's be honest, like if you're buying a growth-based fund over the long term, you're probably going to do better because that's just the way a growth-based fund worked versus a high-yield fund. But there is a lot of stigma around these high-yield funds that they're garbage funds, or they don't have good performance, or they don't have good returns. Well, it really depends on what your goals are, and I mean, what's your definition of a good return? Is it a couple percentages off? Is it like, you just got to kind of look at things from that picture and look at what's happening in the market, right? When you talk about sectors and stuff like that, there is a pretty good mix of sectors because it mirrors the S&P 500. We have very similar sectors like tech, healthcare, consumer, discretionary, and financials. It's going to be pretty much the same. But the nice thing about the S&P 500 is it does have a fairly bit of diversification. It's not like Canadian stocks where it's like energy, financials, and that's pretty much it. There's a few other ones, but that's the most of it. So sector allocation here is pretty good, but obviously it's very close to the S&P 500. We can take a peek at the distributions. One important thing to mention here that I didn't mention before is tax information. So you definitely want to take a peek at the tax information. We can click on this link and it's going to give us more information about taxes. So we can see different things about eligible dividends. And this is an important thing to look into depending on what type of accounts you're holding these into. So because HYLD is trading in Canadian dollars, the US withholding tax is already paid on it and stuff like that. So if you're holding in like a TFSA, for example, you're not going to get dinged to withholding tax because it's already paid. So if you have a 12% yield with HYLD and you're sticking in TFSA, you're going to get 100% 12% yield. So it's important to kind of keep that in mind. But if you're holding it in a non-registered account, like a personal account or something, there are potentially some tax benefits or not benefits, I guess you could kind of look at. So there's eligible dividends, there's foreign income, there's foreign tax withheld, as well as return of capital. So it's important to kind of keep that in mind and look at that, and you'll have to kind of look at things. This is not my expertise, so I'm probably not the best guy to talk about that, but it's important to just be aware of it. The dividends here, we have obviously the company has focused on trying to provide consistent dividends. That's kind of the theme of the HYLD and I think most of the Hamilton funds. Keep in mind, as we take a peek at some of the individual ETFs, the dividends of a lot of them, like if we go over here, let's see here, if we go overview and we go holdings here, so like we have JEPQ, XYLD, JEPI, GLCC, like a lot of these funds have variable dividends, so they normally go up and down. So it's not out of the norm for their yields to kind of like go up and down on a monthly basis. That's just how they work. So Hamilton was trying to kind of get these yields to be consistent, right? Because people want consistent monthly income, especially if you're like in the older demographic, maybe you're living off some of your passive income, you're retired. So what they were trying to do is basically make these dividends kind of consistent on a regular basis. So if we go back to the distributions, we can see that they had 0.13 cents was the first in January, February, March, I guess March of 2022. And then obviously the markets did well, so they upped it up a little bit. And this is something that's going to happen with the fund as the markets go up and they make more income. With the payout ratio, they're trying to balance it out. So you can get dividend increases. In fact, HDIV, if you look at its distributions, have had a couple increases because the Canadian markets have done well, as well as the holdings and the way the fund is structured. It makes it easier for them to hit the income. So just kind of keep that in mind. But they've been pretty consistent, and obviously now with the payout ratio going a little bit on the high side, they bring that down a couple cents, right? It's a small dividend cut, but once again, the original focus of the fund was to hit that 10% yield, and it's still high. Like it's still very, very high. So we need to just kind of keep that in mind. But here's the different dividend ETFs that you guys can take a peek at here. I'm not going to go through them. Obviously, there's a lot here, and they have switched them around. So one of the biggest things they've done is they've swapped out some of the different ETFs. And from my understanding, I'm not an expert on covered call ETFs and the different funds. I'm still kind of in the learning phase, but a lot of people have said this is definitely going in the right direction. One big thing they have done is cut back on fees, even though the fees are still kind of there. But keep in mind, you're still going to get whatever dividend yield it is. So it's just important to keep that in mind, right? But they are working on cutting their fees. They have added some better funds. They're kind of switching things around to kind of just give a better product, right? You know, like this is very much, I think, a fund where you're learning things, the markets are doing things, and you're adjusting to things as things go. So that's kind of the purpose, and that's kind of what's been happening here. So you guys can go through these ETFs. They're pretty equal weighting, other than I guess some of the ones towards the bottom here. You know, obviously the bigger ones at top here. Going down here, there's not too much other things I want to talk about, but as we go through the video and we finish up here, I'm going to show you guys my all-time return. I'll give you guys my thoughts, and I'll kind of explain to you guys why I actually hold HYLD inside my stock portfolio. If you take a little peek at my stock portfolio, we can see that my all-time return for HYLD is kind of sitting in the 0.39% range. When it comes to stock appreciation, I am down negative 713%, but if we add in $660 in dividend income, which is the main purpose of this fund, it kind of brings me up a little bit. So I told you guys I'd show you guys my return, and that's basically how HYLD has been doing for me. And because HDIV is in the Canadian markets and the Canadian markets have done a little bit better, obviously the total return for this one is a little bit higher. We have a total return of about 6.29%, so it's been doing pretty solid. But once again, you know, the Canadian stock markets and the way HDIV is structured, it's actually been doing quite well. So I like to, one thing I am going to be doing in the future is kind of diversifying between the two and kind of holding a combo of them and kind of building up both positions inside my entire portfolio. So at the end of the day, guys, when it comes to HYLD and passive income funds, I'm really just holding them to get more yield inside my portfolio. I do have a very growth-based oriented portfolio, but I also have a portfolio that's kind of like a bit of a mixture of everything. And I do like dividend income. Dividend income is my focus, but I also like passive income. I like the idea of having like a small percentage of my portfolio, even if it's just like 10, 15, 20%, and that is kind of changing as I adjust things. And most likely as I get older, it'll kind of creep up to be a little bit more and more. But the whole idea is to have like some types of funds where I can use the passive income if I want, and I don't have to worry about the kind of the worries that come with investing into a dividend stock or a growth stock, where the stock appreciation goes up and down, and you have to worry about the markets. You have to worry about if you want to sell or not. It's very simple. And the other fact, the obvious fact, is some of these covered call ETFs or the high income funds give you a higher yield. So you really don't need as much money invested to get that income coming in. So there's also the benefit there. So really, if I'm kind of to summarize why investing in these funds, that's really what it is. It's kind of a combination of doing everything. So I have the growth, I have the dividend income, but I also actually have some passive income coming in, and I can use that passive income, be flexible with it, and do it in the easiest way possible. So I hope this video helped you guys out. Like usual, share with your thoughts. I know HYLD and these covered call ETFs aren't for everybody, and I know they're kind of confusing funds. So if you guys have any questions, or you're not too sure about anything, be sure to leave a comment in today's video. Take care. I'll see you guys later, and have a good one.